Welcome to the Friday Five with Steve Greenfield on CBT News.
Welcome to this week's Friday Five, where we recap the last week's automotive technology deals. This is Steve Greenfield from Automotive Ventures, and thanks for joining us. We've had a lot of news over the past week, so let's get started. We're in the middle of Q3 earnings season, and the strong performance from automotive stocks continues to illustrate just how resilient the auto industry and dealer operations have been. Thin inventory and strong demand sent Q3 gross profits soaring on both new and used vehicles for AutoNation, Penske Automotive Group, and Lithium Motors, all of which reported results with bottom line increases topping 80%. AutoNation CEO Mike Jackson noted that they haven't had sufficient new or used inventory to meet demand, so they've been able to hold prices and gross margins. Hopefully, healthy demand and profits continue for dealers into Q4. Strong interest in the automotive space from investors continues. A strong stock market, Carvana's $35 million market cap, and the ease of going public through special purpose acquisition corporations or SPACs is adding fuel to the fire. This week, it was announced that CarLots, an online consignment store for used cars, has agreed to conduct a reverse merger with SPAC Akamar Partners Acquisition Corporation. The deal values CarLots at $827 million, similar to where Shift Technologies is currently trading. A group of investors that includes Fidelity Management, Car Global, former GM CEO Rick Wagoner, and TRP Capital Partners has also committed to a $125 million investment into the combined company. As part of the deal, CarLots will receive an injection of up to $321 million, which it plans to use to expand beyond its current 8 locations. It's very interesting to see Car Global, the parent company of the second largest physical auction company, ADESA, invest in a physical dealership. CarLots would be the third major U.S. online car seller to go public this year after Vroom and Shift Technologies. While selling nearly 3 times the number of units, CarMax's market capitalization at $14 billion is less than half of that of Carvana's. But the country's largest retailer of used cars is not sitting still, having recently announced that they've rolled out their omni-channel customer experience to 100% of their stores. In a strong signal this week, CarMax is aggressively hiring in preparation for growth. CarMax announced plans to hire more than 3,500 positions company-wide by the end of the year. These positions include more than 1,300 auto technicians, detailers, painters, and inventory associates, more than 900 store sales and business office associates, more than 600 customer experience consultants, and more than 100 digital technology, product, and data science employees. In the middle of COVID-19, it's great to see CarMax hiring so aggressively. The automotive retailers are feeling confident, and AutoNation announced plans to nearly double its combined new and used vehicle sales to 1 million units annually, and to add at least 95 used-only AutoNation USA stores to help reach that goal. The company did not specify when it aims to reach 1 million sales, which would be up from almost 529,000 last year, beyond calling it a long-term target. AutoNation, which has only 5 standalone AutoNation USA stores today, said it will add 5 more by the end of next year, grow to 30 by the end of 2023, and to at least 55 by the end of 2025. The nation's largest new vehicle retailer wants to have at least 100 AutoNation USA used stores by 2030. This one is my absolute favorite story of the week. Scott Painter, the founder and former CEO of online car leasing startup Fair.com, is exploring a bid to acquire the company from SoftBank's Vision Fund and other investors. Painter, who stepped down from Fair last year, is in conversation with one or more SPACs to potentially make a bid. In late 2019, Painter resigned as CEO of Fair, but stayed on as chairman. Painter founded Fair in 2016 after leaving TrueCar the previous year. Fair grew to over 700 employees and acquired Uber's leasing company Exchange Leasing in 2017, and Ford's Canvas subscription platform late last year. At that time, Fair claimed it would be adding Canvas's customers to an existing base of about 45,000 monthly users in the US. SoftBank led a $385 million investment into Fair at the end of 2018, pushing the startup's valuation to about $1.2 billion. Fair has raised close to $700 million in total from investors. Subscription models have proven to be tough to run as profitable concerns. FlexDrive was launched by Cox Enterprises in 2014, and in 2017, Cox and Holman Enterprises announced a joint venture to hold FlexDrive. In February of this year, it was announced that Lyft acquired FlexDrive for just $20 million. Founded in 2014, Clutch was a similar vehicle subscription service launched by Cox Enterprises. Clutch was then acquired by Cox in 2018 as now a wholly owned sub of Cox Automotive. Clutch powers a number of OEM subscription services, including the Mercedes-Benz Collection and the Porsche Drive program. Clutch claims to work with 3/4 of OEMs and over 400 dealerships. If Scott Painter can convince a SPAC to take a run at Fair, I wonder, will he take the opportunity in parallel to acquire any additional companies that he's previously run? We should all be thankful that the auto industry is never a dull place to be in. COVID-19 has really energized certain segments of the economy. I talked to motorcycle, boat, and power sport dealers who are amazed at how strong consumer demand has been this year. RV rental company RV Share recently raised more than $100 million from private equity companies KKR and Tritium Partners. The proceeds of the funding will provide operational support to meet the booming demand for RVs as Americans hit the road in unprecedented numbers. The company saw a 650% increase in bookings from April to May of 2020. We continue to highlight interesting companies in the automotive technology space to keep an eye on. If you read my monthly newsletter, I showcase a few companies each month, and we take the opportunity here on the Friday 5 to share some of those companies each week with you. Today we'll look at 3 very interesting automotive tech companies: Motive Retail, Darwin Automotive, and Spiffy. First up is Motive Retail, a software company founded in 2008 by partners Kim Campasi and Dan Seitz and based in Louisville, Colorado. Motive Retail provides innovative and dynamic system integration solutions to auto manufacturers and dealer software systems. Motive Retail provides a suite of solutions that help businesses integrate faster, better, and with more partners. You can kind of think of them as the API layer between the dealers, OEMs, and software vendors. Working with third parties on complex integrations typically introduces variables in the process you can't control and results you can't predict. You're often left with bad data, heavy support costs, and frustrated customers. Motive Retail reduces the cost, time, and pain of integrating software systems. The second company we're showcasing this week is Darwin Automotive, founded in 2014 by CEO Phil Bautista and based in Boca Raton, Florida. Darwin's mission is to connect consumers' desire for a seamless, transparent shopping experience with dealers' desire to provide them with this experience while increasing profitability. Darwin currently has over 7,000 dealers across their 3 business lines, which are digital retailing, F&I software, and consumer direct. Darwin's digital retailing solution allows consumers the option to handle more of the car buying process online. Darwin Automotive has become the leader for F&I presentation software, providing more than just the industry standard F&I menu. Their patented technology evaluates the overall car deal for each individual consumer to determine the ideal presentation, which is proven to increase sales and decrease chargebacks. Finally, their Darwin service product provides dealers with the technology and training to sell declined F&I products to customers that didn't buy them at the time of purchase. Darwin claims to be the fastest growing software in the F&I space. Finally, this week, we showcase Spiffy, an on-demand car wash and detailing business founded in 2014 by Scott Wingo and located in Raleigh, North Carolina. Wingo is a serial entrepreneur who successfully started 4 startups, most recently exiting Channel Advisor, which IPO'd in 2013 and is listed on the New York Stock Exchange. Spiffy is a technology-enabled on-demand service that allows customers to request and schedule vehicle service and repair through a mobile app. Spiffy offers on-demand car wash, detailing, and mobile oil changes. Spiffy's goal is to provide truly convenient and environmentally friendly car care for individuals and fleets across the country. With the Spiffy app, consumers can schedule, track, and pay for mobile oil changes, car washes, and other maintenance services at a time and date that fits their schedule. So that's your weekly Friday 5, a quick wrap up of the big deals in automotive technology over the past week. It's an exciting time to be in the automotive space. I'll keep my fingers on the pulse of deals being done, so tune in each week so I can share updates with you. Please feel free to contact me anytime. I always look forward to catching up to discuss the industry. Thanks for tuning in to CBT News for this week's Friday 5, and we'll see you next week.
Thanks for joining us for another edition of the Friday 5 with your host, Steve Greenfield.